What is going on, guys? Nick here, back with another video. Options trading is hard, like really hard. And it's even harder when you don't have an actual strategy or consistent plan to use to trade options. So a few months ago, I came across a Reddit post where this guy had sold put credit spreads on Tesla for over a year and turned about $12,000 into $19,000 in profit in just 1 year of trading. So feeling a little inspired by this post, I decided to see if I, and more importantly you, would be able to follow some pretty simple rules to actually profitably trade options. So the idea is plenty of people from the Wall Street Bets crowd, they like to buy cheap out of the money options and hope that the stock moves wildly in their favor and they end up making money off of them. And our goal is to just sell these guys those options. So in other words, we're going to sell theta. Specifically, the plan is to sell options 45 days out from expiration at the 20 delta strike price, and then we're going to buy them back at the 21-day strike price. The reason why we picked that timeline is because options that are priced out of the money typically decay a lot in value during that time period, and by buying the options back 21 days before expiration, it gives us a little extra flexibility just in case there's some wild swings in the underlying stock price. Now, we do need to also employ just a little bit of risk management for this to work. So our stop loss is going to be placed if the option crosses over a 30 delta. In that case, we're going to try to roll it back out the 45 days as best as possible and reset it down to a 20 delta. Now our max profit is going to happen when we hit either about a 7 or an 8 delta. Although there was definitely a few times that I needed a little bit of cash to cover another option that didn't quite work out as well. So sometimes I rolled the options a little early to get some of that cash. Now to sell options, typically you have to have 100 shares of a stock to act as collateral for the option. However, the other possibility is if you own a call option that's just dated longer in advance, you can actually use that as collateral. This is called a leap. So what I'm going to do is run the poor man's covered call, and I'm also going to sell some put credit spreads on a few other stocks. So the specific stocks that I'm going to use is a poor man's covered call on Apple, 100 shares of Ford, plus a leap on Ford. So we're going to actually sell two different call options on Ford. We'll also sell a Visa put credit spread and a poor man's covered call on Visa. Then we also have a put credit spread on SPY and another put credit spread on Amazon. And then on CVS, I have a leap that's just a little bit out of the money, and because I just had that sitting around in my account, I figured why not sell calls on that one as well. So to make this a little easier to follow, I also broke this down into 4 quarters so that we can see all of our trades kind of chunked together. Okay, so here's the first quarter, and just to break this down, here's the actual option that I was trading. This is the date that I opened that particular option, and this is why I ended up exiting the trade. The specific options listed here, what I was actually paid, or the cost, is in this column. What I had to pay to buy back the option is in this column. Here's the profit from that individual trade, and then this is the rolling profit as it continues. So this chart shows the rolling profit as we went through the quarter. It's also not on a uniform timeline. It's actually just done by trades right here, but you can see our first couple trades actually weren't very good, and we were actually in the hole to start this out, but very quickly we started to turn some profits, and at one point we were actually up $400 pretty early on. This is only about a week into this strategy test. We ended the quarter with about $321 in profit, so not a bad start to this. When we look at our individual trades broken down, we can see what really hurt us here was this $99 loss that we had on an Apple call, where Apple actually hit our 30 delta stop loss, and we had to take that $100 loss. We did have a couple smaller trades that did seem to work out, but what really paid off was when Apple moved back in the opposite direction. We sold a $190 call. We ended up getting a low delta on this one, so we probably sold out around a 5, 6, 8 delta, and we ended up profiting about $200. So that definitely made up for a big loss that we took on Apple earlier. We also had Visa move pretty much in our favor, so we ended up making $235, which had put us at that $423 profit. But then unfortunately Amazon kind of moved in the wrong direction here, and quickly we lost almost $300, which took us down to about $150 made for the quarter. We did have a couple smaller moves, another big Apple move right here where we made $110, but we ended out with about that $321 in profit, so not a bad quarter. Now when we go over to the chart, we can see what the stock market was doing at the time. So SPY did have a pretty good rally at the beginning of the quarter, and then we saw a pretty slow and steady sell-off, so this is probably why we saw some of those big hits with the Amazon. But on the other hand, this is why we ended up making so much on those Visa and Apple calls. So playing both sides definitely worked out to our advantage here. I also think I forgot to explain this. These black lines are where the quarter started and stopped. So this is Apple's price, and we can see why we had to take those losses early with those calls, but then the stock ended up selling off, and because we continued rolling these down, that's why we ended up making so much profit off the Apple calls. So now moving on to the next quarter, which starts right at this black line, we can see this quarter actually went pretty poorly for us. We basically traded fairly sideways and then ended up with a loss by the end of the quarter, which came at around May 2nd. Now when we look at our specific trades, we can see that Amazon did again kill us with a 35 delta roll. Unfortunately, I didn't notice that this had moved wildly in the wrong direction. So I took $157 loss here. We were still at $164 in profit. So not terrible, but it was just continuing to dogpile on us. It looks like SPY killed us with about $140 between these two trades, and then eventually Amazon is what took us into the negative, where we were down $16, and then SPY killed us again, $127 in the hole. And then at this point, I actually just had to close my Amazon put credit spread. At this point, I actually did not have the cash to continue to roll this forward. So I ended up just closing out the Amazon put credit spread, and I ended up using the collateral cash that had been sitting on the side for that option, and I just rolled it into Amazon stock at that point. I probably should open this one back up again, but the stock has continued to drop since, so I probably would not have made a whole lot of money if I continued this put credit spread anyway, so it's not the worst thing to happen. You definitely don't want to be selling puts on a stock that continues to fall. So we can see we did end up with 3 profitable trades. We had a CVS call. I wrote that the return was too good on a new call for me to not take, so that's why I opened this up. It was $66 and it was for a $113 call. So I was like, I gotta do this. There's no way the stock is gonna hit this price, and I might as well just take the $70 approximately that I'm getting. And clearly it worked out because I ended up netting about $46 on that trade. We ended up with about $50 in the hole. So not a great quarter. We definitely got humbled a lot here. So moving on to quarter 3, this was actually one of our best quarters right here. So it starts right at this black line, and we can see at one point we were up to almost $600 in profit. We hit $550 for our max gain during this quarter. Now when we look over at our trades, we can see that we had a whole lot of profitable trades here. So we can see that Apple, I just continued to roll it down. Visa, I had a low delta. I did hit on a Visa put credit spread, but this actually wasn't that bad, because while this roll did end up losing me $40, by rolling it down, I ended up making it back on the next trade, which would eventually close out with about $55 in profit. So not too bad there. We ended up covering our rolling cost. With our Visa call here, we did take a pretty good loss eventually on it, so we lost about $100. But overall, very good quarter, very consistent, steady gains on this. Some of these weren't, that great, where I only made about $4. I probably rolled some of these just to try to generate a little bit of extra cash for something that I was doing at the time. I'm not necessarily sure what that was. So I didn't always follow my rules exactly, but we can see that generally following them, it does work out in our favor with this strategy. Now, when we look at how the market moved during this quarter, we can see that overall, this is SPY. It did move very negative here, and we surprisingly did not do quite as bad, even though we do have some put credit spreads open. It seems like our calls are actually the most profitable trades of all of our trades that we have, and that kind of works out in our favor in a bear market like what we're going through right now. Now, I do want to point out that Visa was a pretty interesting trade here, because we are running a put credit spread and we're selling a call. We don't want as much volatility from Visa, and we saw that we actually did get a pretty good amount here, where the stock went from about $212 to hitting a low of $190 per share. So that's a pretty significant move for Visa, but because we only got one really sharp move and then the stock seems like it mostly leveled off, this ended up not being quite as painful as it otherwise could have been. Alright, so now going into our last quarter, things did get a little bit rough here again. Unfortunately, I was riding pretty high with this third quarter where we saw a lot of gains, and I thought, man, this is pretty easy. I should have started doing this a lot earlier. Unfortunately, we got completely wiped out again. At one point, we were down almost $300 on all of our trades. We did end with a couple strong moves that did put us in the positive by the end, so we currently are turning a profit with the strategy. Now, keep in mind that the ones that are currently open, I did enter in today's value for them as the closing price. These are not finalized, so this doesn't necessarily mean that we're going to actually end up with this $24 loss. It just shows how the options moved since I opened it. We can see that we did start the quarter with a pretty good brutal streak right here. I had multiple 30 delta rolls that I had to take. I did get one good roll down where I ended up making about $60 on this. The biggest move though was this Apple call that we ended up closing out at an 8 delta, which netted us about $200 in profit. Again, with this Visa call right here that netted us almost another $200. And these two trades really pulled us out of the hole because we were down 293. This got us back to minus 88, and then this one got us back into the positive at plus $134. So that puts us at a current profit of $128 with all of our trades added up. So now when we look through at each of the options that I was trading, we can see which ones were the profitable ones. So we do have Apple where we netted about $450, Ford, which both of them made about $100 each. Our Visa put credit spread actually lost us about $110. Our Visa call though brought a lot of that back with about $336 in profit. SPY ended up losing us about $275. Amazon lost us $545, and then our CVS call netted us another $68. So overall, not too bad. What this does really say to me is that the underlying that you pick and the way that it moves can dramatically impact how profitable the strategy is for you. And especially with all of the volatility that we've seen over the past couple of months in the stock market, this does say to me that the strategy is pretty viable as long as you pick the right stocks to do this with. So I'm definitely going to continue running the strategy, and I'll update you guys periodically on how it's doing. And if you guys have any questions or comments, ways that I can improve this, please let me know. I'd love to hear from you. I'm also going to post this exact spreadsheet down in the description, so if you want to check it out and kind of figure out what I was doing and look at some of the trades more in depth, feel free to have at it. So that's the video, and as always, thanks for watching.